So I have developed my model. I call it the 3T model. Very simple. Very simple. As I said, when I started my presentation, I said the first thing that you look forward, that you look for in a person when he is investing is the philosophy of investing. It is not the final outcome. We are only concerned with the final outcome. पैसा मिला कि नहीं मिला, पर यार वो प्रोसेस तो समझो यार, जहाँ से पैसा आया, सही है कि नहीं? क्योंकि वो अगर आपने प्रोसेस समझ लिया, আপনি যখন ওই প্রসেসটা বুঝতে পারেন, তখন আপনি কি করছেন? রিপিটেবিলিটি. We can repeat it over and over again. If you understand the process, right? It's like mathematics. 2 plus 2 is always 4. Why? Because you understood that symbol plus stands for something, and that leads to an outcome which is demonstrably correct. Understand the word demonstration. Okay? We can actually demonstrate it to be correct. The 2 plus 2 is 4. How? Okay, fine. This is how it happens. Right? So I am going to demonstrate to you. This is not going to be something which is theoretical in nature. It has to be practical. I use the word that I tell you. What is it? Actionability. So anything that I give you has to be actionable. Not by choice. It has to be actionable invariably under every condition possible. Okay? Now, are there conditions which are other than under every condition possible? Yes. The unknown. As I said, there are two types of uncertainties. The known unknown, which can be quantified, and the unknown which can never be quantified. Can you give me an example of an unknown? Think about it. Of course you can. You're living through it right now. Who knew that just one little COVID virus? Sorry? No, it is not unsystematic. You can't even use the word unsystematic because there is no system that can actually utilize it. So it is beyond all system, both system and non-system. You get it? So pandemic is one of them. So look at what is the size of the coronavirus? 120 nanometer. Okay, that's the size of coronavirus. Just imagine what it has done for us. It's crazy. Our entire cultures, human civilization has changed after this. Entire cultures have changed. Sorry?
The way we think has changed.
Yes, that is correct. So anything that I give to you today has to be actionable. Why? Because we are not there to waste our time. We are there to make money. Ultimately, at the end of the day. So I started asking myself some very important questions. Are you guys pressed for time?
No.
None of you? Okay. So I started asking myself, this exactly happened. I can tell you the date when I lost everything in the stock market. 2007, 8, because that was 2008 was when the stock market actually hit a bottom. Okay, and then after that it went up. So 2008 I almost lost everything. And I started asking myself, how is it that I can define what went wrong? Because it is the definition of a problem that leads to quantification. Please remember this. Definition leads to quantification. If you can define a problem, you can measure it. Right? What's your problem? I'm going to get divorced. Okay, fine. Uska matlab kya hai? Damn it. I have to give a settlement to my wife. How much is it going to cost me? So, okay, fine. It doesn't matter. Every Sunday I'm going to cook. Chalo bhai, problem solved. Right? So, definition leads to quantification. So, we are going to define the stock market. We are going to define it in terms we can understand and quantify. So, how do we do it? So, I found out there were 3 very important parameters that actually defines the entire stock market in a way that we can understand and quantify. Only 3 parameters. Okay? So, just think, you are defining the stock market in 3 parameters, and each parameter now is quantifiable. So if you can quantify it, then you know, all right, this is the place jahan par I know this particular stock is cheap and I should be buying it. Simple? So let's start with this. The first quantity is trend. Okay? We all know what trend is. So there are long-term trends, there are short-term trends, there are medium-term trends, there are trends within trends, right? So a trend within trend would look like this. We know what a long-term trend is, short-term trend is. So trend within trend is right? So what is the actual long-term trend? But there is a trend within trend, right? It is coming down in between and then it falls again, then goes up and then falls. But what is the parameter here we should be looking? That it is making higher highs. Each time it comes down less, usually, other than this one. Correct? And there are higher highs. If you have a trend like this, it is a healthy stock. We'll come to it later. So I'm just talking about the basic trend. We all understand what trend is. Now the thing is, can we quantify it? If we can quantify it, then we know that what the trend is, right? Whether it is going up, whether it is coming down. So it is the quantification that matters. So fine. So we say that actionability will depend on the 3T model. What is the 3T model? Trend. Second is timing. And the third is target. You won't believe, once I got these three, I did not need anything else to define or to quantify for any damn stock market in the world. I have worked with TSX, Toronto Stock Exchange. I have worked with NYSE. I have worked with NASDAQ. I have worked with Dow Jones. I am working with BSE and NSE. You can do the same thing. It is completely replicable and scalable. Now I am introducing two more definitions. These are really important. In our world of statistics, if a trend is not replicable, is it of any use? No, because you can't make money out of it. So it is not actionable. Right? And if it is not scalable, what is scalability?
Increase the volume.
Right? You increase volume. You make more and more money. Utilizing the same method. So quantification leads to replicability and scalability. Right? And what are those quantifications that we are doing here? The trend analysis, the timing analysis, and the target analysis. Self-explanatory, right? Trend is basically the direction, the general direction. I'll use very simple words. General direction of stock takes. Will that be okay? Please understand the words. It is very important that you really give credence to the words that are being used. Did I say the specific direction? I did not say it. The general direction of the market. Okay? And then we'll break these things down, all three of them. Right? So what do we have right now? We got the trend, we got the timing, and we got the target. Can you think about it? Is there any other way of defining the stock market? Something that I can add. If I can add, thank you very much. I'll take it home and start doing research on it.
Sir, timing এর মধ্যে কি price চলে?
এগুলো প্রত্যেকটা price. All of them are about the price. Every one of them are about the price. The pricing trend, the pricing timing, the pricing target. Are we clear about this?
Forgiveness of the stock.
Sorry?
Forgiveness of the stock.
Oh, that's another one. We will talk about it later. Because forgiveness is basically the robustness. Do you understand what robustness is? Let's say a man who's muscular and somebody who's thin, all right? So who's more robustly built? No, that is not right. Robustness, just as robustness has got something to do with strength, it has also got to do with durability. Who is falling sick more? We've seen that people who are overweight fall sick more. It is simple. Please do not take it personally. If you are overweight, it is not towards you. It is basically a statistical quantity. That's it. Okay? So people who are thin, we've seen that, people who are thin, they have got better lifespans. Why? Simply because metabolism rates, now there is a reason for that. You need too much of energy to keep your body that way. Less energy, so durability is more. So we have got to define what we are looking for. Is it durability we are looking for? If so, then the guy who's got less flesh on his bones probably is far more durable. But if it is not, then maybe the guy who's stronger has got more muscles. So we have to look at it from a comparative way of looking. Okay? So let's now, did you get it? Do you understand the logical framework of it? Right? Everything has to be logical. Everything should lead seamlessly from one point A to point B to point C to point D till that point X when we press the button. So now what we've done is we've come to this trend, timing and target. Let us look at trend, timing and target. Do you see this? Can somebody tell me what he is looking at? Oh, by the way, this is the price time function. Hey, bhetore jeta, that is the price time function. I think some of you who's done a little bit of this thing, stock market, would understand what I'm talking about. This is not a big deal, okay? By the way, the model that I've created is so damn simple that once upon a time I used to have kids this small, 4 years, 5 years, have predict stocks, and they would predict easily. It is so easy, okay? So please look at the trend. What is the trend? What is the general trend? The general trend, let's say from point A here to point B, is one of gradual rise. Gradual rise. So the trend is okay, Nifty is doing things, but it's not that exciting, all right? And even though that exciting means if you actually did a percentage calculation, it's pretty good, because let's say last day how much was Nifty here? Last day, left hand. Left চলে যাও, হ্যাঁ লাস্ট একেবারে লাস্টে যাও, হ্যাঁ ওটাকে তাহলে আরো ছোট করো, হ্যাঁ just any will do. This one, let's take this one, any arbitrary point would do. Okay, what was Nifty here? Just tell me the Nifty this thing. 10,008. So 10,008. And how much Nifty was before it plunged? Before it plunged ওপরে, হ্যাঁ how much was it? হাইটা দেখো আরো উপরে যাও, হ্যাঁ how much is that? So 10,000 to 12,360, that is roughly 23%, right? That's huge. What is the time period? না নিচে থেকে এখান থেকে, হ্যাঁ 2 right? So October to 20, so it means around 16-17 months. Do your calculation, I could be wrong. So, and how much is it giving you? It's giving you 20% in 16 months. So per year, it is giving you around 13.5-14% around. Okay, that's great. Why is it great?
Because we're getting 7.5%.
You got it.
Actually negative.
You got it. So you are actually beating the effective inflation rate by a huge margin, right? So this is the first thing. So the trend was like this, and then what happened? It suddenly plunged. Okay, it made a 40%. How much was it? 12,212 to 8,000. So that was a 30-35% plunge. Just see, 30 to 35% plunge. Okay, all of a sudden. This area is called the unknown unknown.
Yeah, how do you predict that?
You got it? That's a fantastic question. How do you predict it? This is the unknown unknown. I will tell you how to change unknown unknowns into known unknown. We would do that. Okay? Utilizing statistical tools. We'll be using certain statistical tools. Believe me, if you did it, this is, again, I don't care whether you become a customer to me or not, because see, my ticker size is pretty big. I do not take anything less than 5 lakhs. Okay? So many of you may not be able to afford me. Doesn't matter. Some of you might, some of you may not. What matters is you put this into practice and see what happens to your portfolio. You'll never have to actually work. I do not work for anyone. You know what we used to say when I was in BMO? If you've made a certain amount of money, okay, and you're independent of what is happening around you, you don't have to find any other job. So we used to call it the fuck you money, which means you're telling your boss to fuck off. So that's the fuck you money. The moment I made that fuck you money, we're done. I was done. I got out. You can do the same. Now, this goes down. and then it starts rising up again and crazily, right? There are fundamental reasons for that. Why did it rise so high and so fast? Was the economy doing well? No, damn it. 35% of Indians did not have a job then, or they were underemployed. Either that. So underemployment plus non-employment was included almost every second person. 50% of people were not employed, and 50% were somehow in some way or the other, just staying afloat. So what made this go up? Was it technicals? No way, not happening. Was it fundamentals? No way, not happening. What made it go like this? The reason is government printed money. That is correct. Where does that liquidity come from? And how is it that the government money all of a sudden makes its way to the stock market?
Because there is no other place to give the money.
No, that is not true. Who is investing? You should be asking the right question. It is, I always state this.
Banks.
No, it is not the banks. Who are investing? FIIs and DIIs, right? Foreign institution investors and DIIs, domestic institutional investors. Where are they getting the money from? The government is loaning them at ridiculous rates. Whose money is it? And where is it going? To people who already have money. Very unfair. Absolutely unfair. So then they give it fancy names. They call it quantitative easing. Look at these. Quantitative easing. What is quantitative easing?
Giving at a lower rate.
It's basically giving mine and your money for free. For free. Le lo, khulla hai. Ash karo. So this is quantitative easing. And there's another one, a less glamorous name. They call it stimulus.
Special package.
You know what it is exactly? It is the biggest organized loot of public money getting into private hands.
Everything is there.
Biggest organized legal loot of public money going into private hands. People who do not know, don't want it. Now what do they do with that flush? They're literally flush with cash, right? Then comes the economics, supply and demand. Too much money chasing too few stocks. No, inflation is not the thing. This just goes up. Stock market, oh yes, if you're talking about the inflation in the value of the stock market, yes, that is true. Not the inflation in the economy. Inflation hasn't gone up too much, okay? And there is also a reason for that. You know how they control inflation? Aapka khoon khaal uthega. But that is true. They do it by not giving you proper wages. Anybody working for companies? Almost all of us are, right? Or would be, We know what happens.
Salary cuts are no.
Either salary cuts or you don't get an increment, or they pay you far less than what you deserve. All this money getting flushed into the stock market.
How is that controlling inflation?
Because you don't have money to spend. So if you don't have purchasing power, simple, very simple. They exactly know which buttons to push. Okay? So what goes up selectively? Now, see, we don't have a choice. Okay? We don't have a choice. We will have to get that goddamn money. Even if it happens to be just bones, we still have to do it because the flesh is getting eaten by somebody else. All are thrown at us are bones. We need to do this. So how do we do it? So can I just rub everything? Everybody got this? So please remember these things. Quantification. What is this? Replicability, scalability. These will come over and over again. And that all these three would lead to actionability. What is that actionability? You use the button to buy or sell. That is the action that you take. Will depend on the quantification of the problem, replication of that problem, whether that particular, the replication of the solution. The problem needs to be quantified, the solution needs to be replicated and scalable. So let's look at these things individually. So the 3T model. My entire life has been dedicated to this. This is what I do, guys, day in and day out. I work 16 hours a day just doing this. All I know, the only skill set that I have is by, where's the marker? You might look at it and say that it's bullshit. Okay, this is not, this is my answer. This is my skill set. That's all I know. इसके अलावा मेरे को कुछ नहीं आता. If it had not been for the internet, I probably would have been on the streets begging. Okay, but I really know this. Let's look at trend. What is trend? General direction of the price function. Okay, we call it the general direction of the price function. Oh, please don't get confused by the fancy words. Price function basically means the price. Okay, we use it because we put it on a chart, an x-axis and y-axis and this and that and everything, and then the function is basically with respect to time. That's a reason we use. I don't care about using fancy words, but anyway, this is how it is defined. I define it. Okay, trend is the general direction. Now in the trend there would be specific more trends. So trend would have mini trends and mini trends would have micro trends, right? So let's take a graph. I'll make it as complex as possible. This is the graph, okay? Now this is a goddamn complicated graph, right? How do we actually change this graph into something actionable? So you do it by varying the time. So let's say this is a daily graph. When you put it into weekly, when you look at it weekly, you will see that these areas will get smoothened out. So how would it look? And if you did it in monthly, now is this actionable? Why? No, because the trend is predictable. So another word comes in. Right? Yeah. Oh my God, I think I've broken this. I'm really bad at it. Oh yeah, I got it. So, is this trend predictable?
No.
Then this is predictable, right? And this is far more predictable. Can you work on this?
Third graph we can.
Simple, right? So what are you using? You're using the trend to predict a particular stock in order to make money. Simple? That's one part. Next, I will keep this. Let's change the trend to timing. How do I define timing?
Daily, weekly, monthly.
That's a different, that's only the time frame. I want to define it because remember, if I do not define it properly, I won't be able to quantify it properly. Okay? So the timing is basically
How long this song has been there?
the optimum time of entry and exit.
When 2022.
Correct? Will that suffice? If you are being able to get it here, oh my God, this is horrible. I'm a great marker destructor. Yeah, so if you are able to get these, would you be able to make money? Do you understand by this? Simple, right? Very simple. If you can predict the highs and lows, would you be able to make money?
Yes.
Simple, right? Clear? Very clear? Do you need tips now? Do you need news now? You know, see, something magical is happening. Okay, and everything can be predicted with the help of statistics. Okay, what remains? Just one little thing remains. Why? Because we need to know what the ultimate target is going to be, and we hold that goddamn stock. Simple. Did you get this? Who has studied statistics? Someone in your, during college days or whatever, school days, right? Everybody is. See, there are simple things that we know. What are the things? Mean, mode, median. You know these things. Okay. I am not going to get into. Please understand. The best part of this thing is its simplicity. I am not here to lecture you on higher statistics. That is bullshitting. I want you to understand the basics of statistics in order for you to make money out of it. Right? That's the only thing I'm here for. So, do you remember something called a Gaussian curve? Look it up. A Gaussian curve. You know Gauss, right? Friedrich Gauss, the German mathematician. Okay, Carl Friedrich Gauss. So German mathematician. I mean, he had done a whole lot of his contribution to this thing is like crazy. One of the most important contributions of Friedrich Gauss is that he gave you the normalization curve, the bell curve. Okay. Now, what is the bell curve? It is a probability curve. Right? So, probability curve, the bell curve goes like this, comes down, and here the probability of an event happening is maximum. Okay? And then it tapers off. Right? The probability of an event happening over here is really low. We utilize this curve and create our target. How do we do it? We flatten this curve. Don't worry. It is not high mathematics. It is a simple formula which you don't even need to know. None of you need to know. All you need to understand the philosophy. What are we trying to do? Understanding the philosophy behind it. Right? So what do you do? What is our objective? Our objective is to set the targets. Because we know the trend. We have understood the timing. The only thing left is to get the hell out of here with your tail tucked in between your legs with the money in your bank. We're done. And then we start the process again. Okay? So, what the mathematicians have done is, they have flattened this particular curve. So, the Gaussian curve that we will be using will somehow look like Can I rub this? So the Gaussian curve will somehow look like, this is the price time function, okay? So this is the time period t, this is the price p. Simple, x-axis, y-axis, not a problem. Everybody has done graphs, not a problem, very simple. So let's say we have this, okay? So what do? We take the Gaussian curve and we use a flattened Gaussian curve, one Gaussian curve here and the other Gaussian curve here. Same, it is the same. It is just that our Gaussian curve has been flattened. One has been like this, it is flattened like this, the other has been flattened like this. Are we clear? This is your target. Easy, guys? Simple? Believe me, it takes you years to perfect it. This is it, this is your target. You get off here.
Yeah.
And you buy it here.
But you did that. How will we do that?
The market does it for you. It's all inbuilt in the software. Okay? Now, have I invented any one of it? None whatsoever. These are mathematical tools which have been with us for the last so many hundreds of years. All I have done is get them together and create a statistical model. I have defined my problem, right? The problem is how to make money. Sorry, first of all, how to preserve my capital. After preservation of the capital, how to make money. So, how do I make money? I utilize, first of all, I try to look at the trend. What is the trend of the stock? Okay? Please remember, one most important part of the trend is its repeatability. It is repeatability. If it is not repeatable, do not go for that stock. Whichsoever stock would be, even if it belongs to your father-in-law's company. Do not, because what will happen is, you will utilize this particular model, okay, in a wrong way, and then come back and curse me. What the fuck, what the hell did you do? Don't do that. Okay? Go for repeatability. Now you should be asking me the right question. What is repeatability? Over a long time frame. 20 years, 30 years, 40 years. Look for those. So what are you doing? In effect, after you've done this, what are you doing? You're selecting stocks, right? You're selecting stocks. So if a stock actually obeys these 3 rules, you won't believe how rock solid that stock is. Your problem is solved. You're done. Why? Because A, you've got a rock solid stock. Okay? Which even if it goes down, it will go down, believe me. It will go down one day. It is going to screw you one day. But what will happen? Because of the repeatability of the trend, it will again come back, give you your money, and that's it. Are you ever going to make a loss? That is how my accuracy is 95%. Does it make sense?
For all the stocks, there is a lifetime high and lifetime low. So there was a time when as you said, like RNR was like rocking. So at that time, like if someone would have followed that chart, like where they are right now.
Okay. Let's take the chart of RNR. See whether you can get RNR or not. Or let's take, if it is not RNR, I don't know, most probably RNR is no longer there, then take a chart of any one of those, you know, the ones that our clients used to have before. Ankit, Funkit, jo bhi hai dal do. No, that's a great question. By the way, the more you challenge me, I have always encouraged my students to challenge me, prove me wrong. You know why? Because there was this guy called Karl Popper. Look him up. I have used Karl Popper's principle. He was basically a mathematical philosopher. Okay? I have utilized Karl Popper's principle of falsification. Please, this is really important. So did you get this? Did you understand? I will give you the tools as well. Okay? Which tool to use where? Like I gave you the tool for, which is it is called, this tool is called the Bollinger Band. So what does it give you? The target. So you've got a quantifiable formula that gives you the target. What better than this? Okay? Similarly, we will have tools for both the other ones. One is for the target, one is for the timing, the other is the trend. We will have both of them. So, okay, so please have a look at this. If you want, you can come closer, you can have a proper look at it. This is the model. What is a statistical system? A statistical system, a statistical model is nothing but a collection of rules and regulations that give you an output. So we have created the statistical system. Okay? What we have used, look at this. Do you see this?
Yeah,
that is the Bollinger Band. What does it give us? The target. What is this? It is the mid Bollinger. It works. Have you heard of resistances and support? This one, if it goes under, if the price goes under, it works as a resistance. If it goes over, the same thing will act as a support. Simple? Right. So this is the Bollinger Band. Next is, do you see this?
Yes.
This is called an oscillator. This is called an oscillator indicator, called stochastic. I do not want to go into details because I know you are completely what to deaf right now. It is called stochastic. Remember, stochastic is actually used, who would believe this? NASA uses a form of stochastic into predicting the path of satellites. The same tool, in a different way, is used to predicting the path of satellites. So what are you going to use this for, the stochastic? You are going to use the stochastical tool for time. And the third one, for the trend, we use another oscillator. We call it ABX, average directional index. Okay? We have used this system and found that every damn large cap and every damn index follows our model to the T. To the T. What doesn't? What are the ones that don't follow? Now, for every statistical model, there are limitations. Okay? I will give you the limitations. Not merely unpredictable, they are not repeatable. They are not repeatable. So please do not misuse. If you want more information about it, do not misuse the model into going places where it is not supposed to. You will literally fall flat on it. Does it mean that it always fails? No. But it is 100% repeatable? No. It is not going to happen that way. Then you're playing with probability. यार वो 70% repeatable है, 30% नहीं है. अच्छा, अगर मैंने 10 लाख रुपया 30% डाला और सोचा कि 70% है हो जाएगा, लेकिन वो 30% में आ गया तो I'm dead. So do not play the percentage game. Please remember the most important factor in our model are three things.
Sir, what about the target?
I will give you the target, right? Bollinger Band. Bollinger Band is the target. ADX is for trend. Now, when you look into the model, if you guys are really interested, I'm always open. You can phone me up, I'll give you a phone number. Anytime you look into the model, you will see when you actually, first of all, the first thing that you need to do is set it up. Now, setting up the model is easy if you knew the ratios. Parameter ratios. P ratio is, why are we not concerned with P?
That comes to fundamentals.
Simple. P ratios is for chartered accountants, not for guys like me. मैं बिल्कुल अनपढ़ गंवार. Okay, all I have are these. So parameter ratios. So ADX, what is the parameter ratio we use? 14. Now for stochastic, hey, देखो तो 14 use करो या 20 use करो, just have a look. 14. No, stochastic ना. ADX का देखो. 14. Stochastic we use 14.3. Don't worry. Don't get, these are nothing. All you need to do is just punch in those numbers. They are all there. Okay? All you need to do is punch in your numbers. 14.3 stochastic. And the last one is Bollinger Band. Bollinger to देखो तो. $20 बोले. Okay, so these are the parameters. Please remember, these are optimized parameter ratios. I have optimized them over years and years and years and years and years of sampling. Okay? If you can optimize to your own your own whatever you call it, your own choice, I don't have any problems as long as it actually works. Working is most important. Remember, the best this works is weekly. The entire model works fantastically in weekly. Does it work in daily? Of course it does. But the best results is when you wait for a weekly by yourself.
Why is that?
I don't know. I have no idea. There are certain unknowns to it. Okay? That's a fantastic question. Now I'll have to ask that question. Why is it? I think it has got to do with a little bit of, okay, I can give you the answer, but it may not be. Who asked that question? You said? That's a fantastic question. Very good question actually.
What is the question?
Why is it that your model works the best in weekly? Okay?
Daily is totally unpredictable.
Exactly. Daily is so
Daily,
short time.
it is manipulated by the operator.
Not necessarily. Because we are not talking about stocks which are easily manipulatable. Why? Why are we not talking about stocks that are easily manipulatable? Simple. See, you're getting it. You're already starting, you have already started thinking logically. I want that thought process. We Indians are really unscientific about everything else. We are not scientific at all. I thought, why the hell should I not put science over here? Please try to understand. Are there people who do it? Of course. There would be people who use stochastics. There would be people who use ADH. What have I done? What is the difference here? All three of them together. To define and give a solution to different aspects of the same problem. Okay? That is the only thing I've done. Nothing more, nothing less. But the results are unbloody believable. Unbelievable. They have literally, I have predicted things like, when they were 40%, you know, I think I predicted it to somebody, was it you or somebody? They said, this is going to go down. And it did. Why? Because I was getting all the signals generated by the entire this thing. So somebody asked me what happens during crashes, right? Remember, if you want to understand crashes, where do you start? Who said that? 2007. Go for the crashes. Go as back as 1932, 26, 27, I don't know, when the Great Depression happened. Look at those things. You would not need a tip, a bloody tip. You will earn a minimum of 20% per year doing nothing. You know what it means? On a compounded rate, your money will double in 3.5 years.
Which would have brought in which would have brought in an FD.
We'll talk about FDs later. No. He's got a point. How can we utilize FDs into making money in the stock market? Nice question, right? How do you utilize your FDs to make money in the stock market? You don't break them.
Take loan from FD and invest.
Simple. Utilize your FDs. If you've got into a job which actually runs your house, do not break your FDs, but utilize that FD. Take an OD, overdraft. You won't believe I made all my bloody money using this. Using this, and what do? Wait for a crash. Simple. You know, now let me tell you, I have been outside this market for the last 6 months. I haven't made one single money. You know why? My money is absolutely, it is powder dry, you know. It is powder dry. I'm keeping my money dry. This is all froth. Whatever you're looking at is froth. You may have to wait for a year. You may have to wait for 1.5 years. Nobody knows when this is going to crash. But boy, is it going to crash, and how spectacularly it is going to crash. You won't believe it. 50%. जो भी आप देख रहे हो उसका आधा हो जाएगा.
Only last year was
Everything will come down. सब जाएगा. सब जाएगा.
Sir, when will it?
No, but sir, if you buy.
Actually, sir, I want to say something. I am a small time trader, so actually I try to make some money either weekly or daily. Daily I am making a lot of losses. So now I am converting to swing trading. we are waiting for 15-20 days. Now the valuation is so high, so we are not able to make any money.
Who's got that problem?
Everybody.
Anybody else? Anybody who's a serious trader will ask this question. Now I am going to ask you a question. What do you think went wrong?
Valuation is so high, man.
It has got nothing to do with valuation. What is it? Now I'll tell you, I'm going to reduce the number of ifs and buts. I'm going to reduce the number of combinations to this answer. I will tell you it has got nothing to do with valuation. What it has actually got to do with?
It's not following the 3D.
You're not following your own logic.
But sir, এখন কি করব স্যার? মানে মার্কেট তো কবে ক্র্যাশ হবে বোঝা যাচ্ছে না। চুপচাপ বসে আছে।
Just sit right. Why? There is a reason for that. The reason is the system fails sometimes. Okay, now let me tell you when the system fails and how you can actually utilize the system's failure as a signal itself. I don't think you got it. Did anybody get what I said? Who got it? Who can explain what I just said? What I'll repeat it for you. This system, this is a system, right? This is a statistical trading system. The system fails at times. Okay? So when the system fails, what do you mean by the system failure? A system failure is when it stops predicting. Right? It will still predict, but it will stop predicting correctly. So what happens then? Let's say you are now at this particular moment, you seeing that damn it, अब नीचे जाने वाला है पर साला जहां ऊपर रहा है, ठीक है, और आप बोल रहे हो कि नहीं अब तो ऊपर जाएगा ही जाएगा और नीचे जा रहा है, इसलिए होता एग्जैक्टली ऐसा होता है. So what is it that you do? You actually stop utilizing the system and utilize the failure of the system in predicting that signal and do the opposite.
Or you reverse psychology. Reverse psychology.
Do the opposite.
Everything is going down.
If the system is failing and you see that the system is failing, then the opposite must be true. See, this is a binary thing. Either it goes up or it comes down. Okay? So utilize the system. I utilize the system when you actually get familiarized with it. Utilize the system to, when the system stops predicting, what do? You just do exactly the opposite of what the system says. And when does it happen? Now, when is it that you should stop doing that and come back to your normal system utilization? When there is a massive crash. Then you know the health has returned. Please remember, every crash is healthy for the market. Right? So when the health returns to the market, this damn thing will start working again. So why? Have you ever thought why? It is higher mathematics because we are depending on Gaussian mathematics. Gaussian mathematics. Gaussian mathematics only works under certain probability conditions. And after that it stops. Okay? So if you do not use Gaussian mathematics, I have no idea of predicting anything. Because the best predictive tools that we have today is because of Gauss. Other than that, you cannot predict it. People have tried and failed and tried and failed and tried and failed. It doesn't work. Okay? If you ask me, is it better kuch hai? I don't know. I have done 20 years of research. This is fundamental research that I have done. This is not, I'm not bullshitting, guys. Okay? Now let us look at our performance. So we're done with this. If anybody wants to know any more, are we not running short on time?
Just one question.
Yeah, please.
So we basically know that the system is not working. That means the system is going to crash.
No, no, no.
Stock market is going to crash.
No, that means the system is not working. Just do the reverse. Okay? Do not try to put in meaning into the market where none exists. Just say that I don't know what is going to happen. If the trend is still up, then ride it. Okay? That is correct. That's a great point. So what do you do then? When you know that the system is not working, then you use a stop loss. Remember, when the system is working, you won't believe it. These guys know I never use a stop loss.
No stop loss.
I do not use a stop loss, sir.
What is that? Stop loss.
Stop.
I use a stop profit, I don't use a stop loss. It is not needed. Why? Because you picked it at the lowest. More importantly, now the last part of it, just the last part, and then I'll stop. You can ask me questions, or probably we can go home. Were you guys interested? Was it okay?
Yeah, obviously.
Okay.